Hello, everyone, and welcome. I'm so glad you've joined me for this very first webinar. It's a part of a series of communications aiming to simplify sustainability reporting. I wanted to begin with a topic that's on everyone's mind, the CSRD, and especially what it means for SMEs, small and medium enterprises. The CSRD means the Corporate Sustainability Reporting Directive, and it is the European Union law that requires nearly 50,000 companies to publish detailed, comparable, and digitally accessible sustainability information in their management reports. It introduces European Sustainability Reporting Standards, ESRS, and applies the principle of double materiality and mandates independent assurance to strengthen trust in sustainability disclosure. The title you see here, CSRD for SMEs, What You Need to Know in 2025, reflects exactly what I've been asked again and again by SME leaders, verifiers, or auditors, and sustainability officers or professionals worldwide. Where do we begin? What's actually expected of us? And how can we make this doable? So I'm here not just as a trainer, but as someone who's been deep in this field, hearing your concerns and building something that's designed to make all of this feel clearer, lighter, and actually actionable. So let's take a deep breath, forget the buzzwords for a moment, and let's dive in. Before proceeding, I just wanted to highlight that this presentation reflects the latest European Union decisions of September the 1st, 2025, including postponed reporting dates and the new voluntary standards. Just a quick introduction about who I am and what brought me here. My name is Souha Belhaj. I'm the founder of Eco Fluent Solutions, and I have over 15 years of international experience in quality assurance, environmental compliance, and sustainability reporting. I hold a PhD in chemical engineering from the University of Tokyo, and I was certified by JRI for the ESRS professional certification program, and I've led quality, safety, and environment projects across diverse sectors. Today, I specialize in helping businesses bridge the gap between quality management systems and sustainability compliance, especially under the CSRD and ESRS framework. So I created this webinar because over the past years, I kept hearing the same thing from SME owners, sustainability stakeholders, and independent auditors. The CSRD feels overwhelming. It sounds complicated. Where do we even start? And am I concerned? And I realized there's a real need for simple, actionable guidance, especially for small and mid-sized organizations who don't have huge ESG departments. And the truth is, I get it. I've been in your shoes, trying to connect the dots between reporting rules, real operations, and limited resources. That's why I've launched Eco Fluent Solutions and why I'm hosting this first webinar today. So this webinar is for you if you are an SME leader or owner trying to understand if and how CSRD applies to your business. You represent a large company with more than 1,000 employees or a subsidiary of such a group. You are a GSSE or a sustainability professional with new reporting responsibilities, or you are an independent verifier or auditor preparing to expand into CSRD assurance. You are a part of a larger company's value chain and being asked for ESG data. You work in sustainability, compliance, or finance and want to stay ahead of EU regulations, or you represent a non-European company doing business with European clients or markets. And even if you don't feel ready or don't have all the data yet, you're in the right place. I'll guide you step by step so that by the end of these 30 minutes, you'll know exactly what CSRD and ESRS are, why they matter for your business, and how you can start preparing today's without panic. So let's get started. Let's now get into the heart of the matter. What is the CSRD and what makes it such a major shift for companies in Europe? The CSRD stands for Corporate Sustainability Reporting Directive. It is a European Union directive that requires companies to disclose detailed information about how they impact people and the environment, and how sustainability issues affect their businesses. Think of it as non-financial reporting becoming just as important, structured, and mandatory as financial reporting. To understand who is impacted by the CSRD, let's first look back a little. Before the CSRD, we had the NFRD, the Non-Financial Reporting Directive, adopted in 2014. Under the NFRD, only large public interest companies had to report, meaning listed companies, banks, insurance companies, and businesses with more than 500 employees. In total, this concerned around 11,600 companies across the European Union. But there were problems. The reports were often incomplete, inconsistent, and difficult to compare. Many smaller companies were left out, even though they had real impacts on sustainability. Investors, consumers, and regulators pushed for more clear, standardized, and reliable information. That's why the CSRD was created. The CSRD massively broadens the scope, aiming to cover around 50,000 companies, but recent updates have brought important changes. We find with the first wave that covers companies already subject to the NFRD. They must report for the 2024 financial year. The first reports published in 2025. Then we have the second wave that covers large companies meeting two of the three thresholds: over 250 employees, 40 million euros turnover, or 20 million euros total asset. Originally set for 2025 reporting, now postponed to report for 2028 and published in 2029. And finally, we have the third wave that covers listed SMEs and other specific entities. Originally set for 2026 reporting, now postponed to report for 2028 and publish the report in 2029. We need to note here that the Stop the Clock Directive adopted in April 2025 postponed reporting for waves 2 and 3 by 2 years. Also, I need to highlight here an important note about the Omnibus Package. The European Mission has proposed under the Omnibus Amendment to further simplify the CSRD requirements. One key proposal is to restrict mandatory CSRD reporting to companies with more than 1,000 employees. If adopted, many SMEs would be exempt from full CSRD report. These proposals are not yet finalized and remain under discussion. Now let's look on what changed compared to NFRD. We have first the scope expansion. As I said before, many more companies are covered unless the Omnibus significantly changes thresholds. We have also the standardizations. Company must report according to the new European Sustainability Reporting Standards, the ESRS, and also we have the assurance requirement. The sustainability reports will need external audit, starting with limited assurance, eventually moving toward reasonable assurance. Even if you're not directly covered by the CSRD, you may still feel the impact because larger companies in your supply chain may ask you for sustainability data. Banks and investors may request ESG information to assess risks. Public tenders, partnerships will increasingly demand ESG transparency. So CSRD touches more companies than it first appears. Preparing early is not just a compliance strategy, it is business advance for credibility, visibility, and trust. So why this is important right now? Even within the reporting delays, preparing would take times. By building the internal systems, map up your sustainability impacts, training your team, collecting reliable data, and if you are a part of another company's value chain, your readiness matters today, even before direct legal obligation apply. Now that we understand the CSRD framework, the next logical question is what exactly are the ESRS and how do they fit into this new reporting landscape? The ESRS stands for the European Sustainability Reporting. These are the detailed standards that define what companies must disclose, how they must disclose it, and how to ensure the information is structured, comparable, and reliable. You can think of the ESRS as the instruction manual for how to comply with the CSRD. Without the ESRS, companies will still be guessing about what data regulators and stakeholders expect to see. The ESRS are organized into two categories: general standards and topical standards. General standards are called also cross-cutting. We can find ESRS 1 and ESRS 2. ESRS 1 describe the general principles, how to prepare a sustainability statement, structured disclosures, apply double materiality, and other guiding rules. And then we have ESRS 2 that describes the general disclosures, basic and mandatory information every company must provide, like the governance structure, strategy, policies, risk management, and targets. For ESRS 1 and 2, every company must report using ESRS 1 and 2. They are not optional. Then we have the topical standards. These address specific sustainability topics across three areas: environment, social, and governance, known as ESG. They are reported only if material. For the environmental, we have the climate change, pollution, water and marine resources, biodiversity, resource use, and circular economy. On the social side, we can deal with workers in on force, workers in the value chain, affected communities, and consumer and end users. Regarding the governance, we have business conduct, anti-corruption, anti-bribery, lobbying activities, political engagement. So companies are required to report on the topical standards that are material to their activities, which bring us to a very important concept, the double materiality. Double materiality means you must look at two sides of your business: impact materiality and financial materiality. Impact materiality means how your activities impact the environment, people, and society. And financial materialities means how environmental, social, and governance issues could financially impact your business performance. If a topic is material from either perspectives, impact or financial, you must report it. It's no longer enough to just ask, does this issue affect my profits? Now you need also to ask, do my activities affect people or the planet, positively or negatively? Also, under the ESRS, companies must provide a combination of narrative disclosure, like policies, strategies, targets, and actions. We have also data like quantitative metrics, like key performance indicators, KPIs, like CO2 emissions, gender pay gap, numbers of suppliers audited for human rights, etc. And also we have forward-looking information, not just what happened in the past, but plans, goals, and risk management for the future. This ensures a full 360-degree view of your sustainability performance. So to summarize here, the ESRS provide a common reporting language to make sustainability information across companies, sectors, and countries comparable, transparent, and reliable, just like financial accounting standards do for financial reports. So far, we've covered what the CSRD is, who it applies to, and how the ESRS define what to report. Now, let's talk about how SMEs like yours can start preparing step by step. So many SMEs feel overwhelmed by the scope of the CSRD, and I get it. It's new, it's complex, and there's pressure to get it right. But here's the good news. You don't have to start from scratch. Most SMEs already have the right building blocks they need just to connect them into a CSRD-friendly structure. You can start with what you have already, your management system. If your company is certified or even aligned with ISO 9001 or ISO 14001 or ISO 45001, that's a huge start. Why? Because these systems already include policy documentations, risk and opportunity assessment, objectives and improvement planning, internal audits, and management review processes. For example, your ISO 14001 documentation likely includes your energy use, emissions, waste metrics, all of which are needed for ESRS E1 or E5. Or your ISO 9001 system might include supplier evaluation, training programs, customer satisfaction, which can support social or governance disclosure. If you have ISO 45001 system, it might already include workplace risk assessments, record of health and safety incidents, and employee well-being program. These directly support ESRS S1 workforce disclosures, particularly on health, safety, and well-being metrics. For example, accident frequency rates or training hours on safety can be reused to meet the CSRD reporting needs. Map your existing ISO clauses to relevant ESRS topics. It's not a perfect match, but it reduces the blank page fear. If you don't have a formal system, ask yourself, do we have a written sustainability or environmental policy? Do we set goals or track anything related to social or environmental issues? If yes, that's great. You have started already. The second step is to run a simple double materiality assessment. This is the cornerstone of ESRS reporting, and yes, even SMEs must do it. As explained before, double materiality is the process to identify your most significant impacts on people and the planet, called impact materiality, and sustainability risks that could affect your business performance, called financial materiality. Here's some practical tips to get started. Create a small working group, you plus one or two colleagues from operations, HR, or finance. List your activities, manufacturing, transport, sourcing, etc. For each one, ask these questions. What environmental or social issues are connected? For example, CO2 emissions, energy consumption, health and safety, gender equality, etc. You can ask also, could these issues affect your costs, reputation, or ability to cooperate? And you can go further to use a materiality matrix by drawing two axes, impact versus financial relevance, to plot your topics. You can start with Excel or whiteboard. The important is the stakeholder input is encouraged, but not mandatory at this stage for small companies. Now you need to document what you're already doing and fill in the gaps. This is the heart of reporting preparation. Divide your files into these buckets. Policies, that includes environment, ethics, health and safety, human rights, etc. Processes, for example, waste tracking, procurement, due diligence. Then you have KPIs and targets, even if informal. And then finally, you have monitoring results like audit reports, performance reviews, etc. You can use folders or digital space like SharePoint or Google Drive, so your documents are easy to retrieve for your future assurance provider. Even simple Excel trackers or internal procedures can count as supporting documentations. And again, don't underestimate what you already do. After the documentation, set an action calendar and keep it realistic. Many companies try to tackle everything at once. That's the quickest road to burnout. Instead, plan your compliance journey over 12 to 24 months. For example, you can say by Q4 or Q3 2025, Aim to have your material topics clearly identified, your relevant ESRS standards selected, your initial data sources are mapped, your roles are assigned, and by Q1 of 2026, aim to draft the first version of your sustainability disclosures or test validation, internal validations with your team or an advisor. You can also start preparing for external assurance, even if it's limited assurance. You can set at least 3 milestones, for example, double materiality workshop with team, let's say in September, complete data mapping and identify missing KPIs by the end of October, draft ESRS 2 general disclosures by the end of December. Those are tips to help you set a realistic calendar. And finally, assign clear internal roles, even in small teams. CSRD requires cross-functional collaboration. That's why you need to define who is in charge of sustainability data, who collects information from HR, operations, suppliers, etc., who validates the report contents. And even in a 10-person company, someone must own the reporting process. You can call them the CSRD champion and make sure they have time and support. Here, an optional but strategical step, but forward looking also. Consider ISO 27001 or digital readiness. As you grow your CSRD maturity, data security and digital traceability will matter more, especially since the CSRD requires digital tagging using XBRL and your data will eventually be public. If you plan to expand your reporting systems or IT processes, start thinking about data accuracy, internal control, cyber security of your sustainability data. If you're already working on ISO 27001, this will strengthen the credibility of your data environment. But if not, no stress. Just keep it on your radar for phase 2. And again, even basic Excel tracking, documented procedure now will save your major headaches later. Let's summarize what we have explained so far. The 6 key steps to prepare for your CSRD report. Start with your management systems, then run a simple double materiality assessment, document what you already have and fill the gaps, set a realistic action calendar and milestones, assign clean roles, and appoint CSRD champion, and think ahead about digital readiness and data traceability. And remember, don't wait for the law to knock on your door. Use 2025 as your preparation year. CSRD is not just about reporting, it's about managing risks, telling your story, and staying competitive in an evolving market. And it's absolutely possible, even for a small team, to make strong progress starting today. Now, before we close, let me take a moment to answer some of the most common questions. These questions are based not only on what I hear in my daily work, but also on real, frequently asked questions published by the EFRAG and the European Commission. As a first question, do I need to hire an ESG team? The answer is no. This is one of the biggest myths. You don't need to build an ESG department overnight. What you need is someone who takes ownership of the process internally, as we explained before. This could be a QSE or QHSE manager, a compliance officer, or even the CEO if in smaller teams. Start with what you have and seek help for experts or training when needed. Remember, the CSRD reporting is a learning curve, not pass or fail exam. The second question is, we're a small group company. Are we concerned? The answer is it depends. If your group is in a scope and publishes a consolidated sustainability statement, you might not need to report separately. But, and this is very important, even if you're part of a group report, your subsidiaries' data is still required. According to the Commission's FAQs, even when exempt from standalone reporting, companies must provide the relevant information to the parents for the group level, especially in value chain and double materiality analysis. The next question, we don't have ESG data. What do we do? This is very common. You're not behind. You're just early in the process. Here's what to do. Start with what you already measure. Example, like energy use, employee headcounts, customer complaints, supplier audits, and create a mapping table. What ESRS requires versus what you can already access. Then build a plan to fill the gaps. According to the GRI, many ESRS disclosures are qualitative, meaning descriptions of your policies, goals, and risks, not just numbers to collect. Next question. Do we have to report on our value chain? Yes, if the impact or risk is material. CSRD goes beyond your direct operations. You are expected to consider upstream and downstream's impacts, like emissions from suppliers, human rights risks in the supply chain, product use and end of life impact. You can use estimates or proxies if direct data is unavailable, but you must explain how they were calculated. Next question. Do we need to get all these audited? Yes, but not as intensely as financial audit. The CSRD requires limited assurance at first. This means an external verifier will review your process, how you selected topics, check that you follow with ESRS structure, review your data and disclosures for plausibility. It's less about perfection and more about transparency and credibility. The next question. Are there differences between the European countries when it comes to CSRD? Here, another important question I get a lot. While the CSRD is a European directive, its application is handled nationally through what we call national transpositions. This means each country may have its own deadlines, guidance, and enforcement mechanisms. And importantly, assurance rules, especially who is allowed to verify your sustainability disclosures, may vary. For example, in France, CSRD disclosures must be assured either by statutory auditors called commissaires aux comptes or by accredited independent third-party bodies. In Germany, it's mainly the Wirtschaftsprüfer statutory auditors who are authorized. And in Belgium and Denmark, both statutory auditors and accredited independent providers can perform the assurance. So here we can see that some countries are more open to ISO 17029 accredited verifiers, while others restrict the role mainly to financial auditors. Next question. Who is allowed to verify or assure CSRD report? This is evolving, but here's what we know so far. Under the CSRD, assurance of sustainability disclosure is mandatory, starting with limited assurance. The assurance provider must be independent, competent, and authorized by national law. So dependent on your country, it could be a statutory, as I said, auditor or third-party ISO 17029 accredited verifier. I hope I answered all the questions. My conclusion is don't wait to be perfect before starting. The best thing you can do is to start by organizing now and grow in confidence over time. You're not alone, and there's plenty of support out there to help you move forward step by step. So thank you so much for watching this webinar. I hope it gives you clarity, confidence, and structured way to start engaging with the CSRD, no matter where you are on the journey. If you found this helpful, I'd love for you to stay connected. I regularly share content and updates and hands-on tools to help you navigate sustainability reporting with ease. You can connect with me on those platforms. What Eco Fluent Solutions offer is learning on demand, tailored in-house sessions for companies that want to direct support on their teams, e-learning programs with flexible online models can follow at your own pace, designed for SMEs and managers new to CSRD, and internal and impartiality audits for ISO 17029 accredited verifiers. We also provide consultancy, conducting double materiality assessments, preparing your documentation for external assurance under the ISO 17029, and linking your existing QMS quality management system with the CSRD demand. So whether you are an SME preparing for your first CSRD report or a verifier strengthening assurance process, I'm here to help you turn complexity into clarity. If you have any question about anything we covered today, simply type us on the links written below. Thank you for your presence and see you on the next webinar.